Hi and welcome back to Mr. Allred's 5 Minutes On. Today I'm going to be talking about trading blocks and the European Union. Now, this video is designed for GCSE students, so if you're an A-level student then you might want to look at something a little bit more detailed. If you're an economic student you definitely need to be looking at things like trade creation and trade diversion, and it's in particular the diagrams for that. This video is obviously going to be talking about the EU, which is a very contentious issue. It's not a political standpoint in any way, shape or form. I'm going to present both the positives and negatives of EU membership. What I will say is the reason why we do this is because it's part of the specification. Trading blocks are on your specification at GCSE, and so is the European Union. So therefore you need to understand how that impacts business. So let's start with this then. What is a trading block? Well, a trading block is an agreement between countries, often regionalized, to areas of the globe like the European Union, like NAFTA. It's an agreement to trade freely without barriers in place, barriers such as tariffs or quotas, and therefore it encourages trade between those member states. As a result, it discourages me to trade with somebody outside of those member states. So UK member of the European, as a member of the European Union, is encouraged to trade with those countries in Europe, but not encouraged to trade with China, for example, or New Zealand, because there might be barriers in place for those countries. So there's lots of examples around the world of trading blocks. Obviously, the one you'll be most familiar with, should I say, is the European Union. NAFTA is an example, which is the North American Free Trade Agreement, and pretty much every area of the globe has some form of trading block in which they deal with their neighbours and have agreements with their neighbours to deal on a more free basis than if they weren't in those blocks. So let's have a look at the European Union. So the European Union is a group of 27 countries. It's a customs and monetary union, customs union in terms of trading of goods and services, and a monetary union is the euro. Now obviously not all member states are a part of the euro in Europe, but there is a monetary union there who share a common currency. We're not going to talk too much about that today, but we are going to talk more about that free trade, if you like. So the European Union is based on what we call the four freedoms, and that's free movement of goods, free movement of services, free movement of labour, and free movement of capital, essentially allowing free movement of those four things around those member states. So let's have a look at how those four freedoms impact UK businesses. Well, there's two real main ones for GCSE business. It's easier and it's cheaper to export goods to those countries. If I don't have these barriers in place, these things like tariffs, these things like excess legislation in place, it makes it easier for me to transfer and export a good from the UK to France or from the UK to Germany. And therefore, if it's easier, it becomes cheaper. And if it's cheaper, well, that makes me more competitive as an exporter. And if you think about videos that I've done in the past, such as imports and exports, I mentioned about being a good exporter is about having the ability to keep prices low. Well, being in a free trade agreement, a trading bloc like the European Union, enables those prices to be kept low because I'm not having to pay excess tariffs on top of that. It's easier for me to get into those markets, and as a result I keep those costs lower. I also get access to cheaper labour. Free movement of labour means across the EU I can get labour from different sources that might be willing to accept a lower wage than we're currently on. A very contentious issue with lots of people, but that is part of the benefits. Above that though, it enables me to fill skills gaps. You see, Germany is renowned for having some really good engineers. If I need really good engineers, it could be that I go to Germany to recruit those engineers that I need within my organisation, and it enables me to fill skills gaps that perhaps domestically we don't do as much on or benefit from as much as we could, and therefore it enables me to get those key workers that I might need from other member states and therefore benefit me as a business. Now there's some significant problems with EU membership. Trade diversion occurs. It creates trade between those member states, but it also diverts trades away from other countries who aren't part of that agreement. Now this can be a bit of an issue because often those countries might be the most efficient in producing a good and therefore might be able to offer that good at the cheapest price if we removed all things like taxes and tariffs put in place. Now the European Union has lots of tariffs on goods from all around the world, including say China. So the issue is there, if that good coming from China comes to the European Union, the price of that gets raised by a tariff, and as a result it becomes cheaper for me to deal with somebody in France than it is in China. But if that tariff wasn't in place, the good in China would be cheaper for me as a consumer, and that's a significant problem. I could be paying a higher price for a product than I potentially in theory have to. Free movement of labour can cause issues. Yes, in terms of immigration, and yes, in terms of those things, but actually it could cause a brain drain. See, if I'm renowned for having a certain set of workers that are really, really good at their jobs as an economy, they might be poached by other member states to come and work in that economy, and therefore I see a brain drain. I see these high skilled workers that my economy's paid for through their schooling, through their education, leave my economy to work in another country because they can, and there is no barriers for them to do that. With that free movement might mean high unemployment as well, because if we get this abundance of cheap labour coming in from different countries, then what might happen is that we see a lot of people not able to get a job because we have an abundance of people going for a limited number of jobs. This can cause unemployment to be higher. This is a real big problem that the UK and lots of people who are against the European Union feel is an issue with our membership in the European Union. Another issue is the European Union sets a common set of standards. Now, the problem is with that is that we have to meet that standard. Our businesses have to meet that standard. That can increase our costs. The quality standard, the health and safety standard, or other red tape or bureaucracy that the business has to agree to and has to meet could add cost to it and therefore make it less competitive on the international market. Might do quite well in Europe, but actually when we take it to America or Australia or China or elsewhere in the world, is it competitive and can it compete on a full international scale is an argument. So this has been Mr. Allred's 5 minutes on, sorry. I hope you've had learned something from today. If you like the video, please like it and please subscribe, and happy learning.